Hello again, friends and neighbors. Drew Johnson here, East Region Grain Origination Manager with Agtegra with the weekly market update. Market volatility continues as world headlines drive price action. U.S.-Iran agrees to a 60-day extension of the ceasefire, and talks continue there. And crude oil prices are below $90 a barrel and putting a little stress on the commodity markets. U.S. weather in the near term is seen as favorable. On to the corn side of things, values continue to move lower on weakness in crude. The market continues to balance the U.S.-Iran relations, U.S.-China deal news or lack thereof, ethanol demand, fund length, and planting progress. Ethanol production for the week of May 22nd fell back from last week's report, but still holding a solid number at 1.089 million barrels per day. U.S. planting progress as of Tuesday was at 86% complete versus the 83% average, with emergence at 60% versus 58% average. Technically speaking, the futures trying to hold support on the July board at 4.5, while December futures is holding support right around 4.70. On to soybeans, the soybean market has kind of moved into a sideways to slightly higher pattern after the reset last week as soy oil is hitting new multi-year highs. The July soybean contract has been range-bound between 11.70 and 12.30 futures, while the November contract is a little less volatile and is sideways pattern between 11.80 and 12.14. Negotiations between U.S. and China are still seen as optimistic to the market, and there was some technical buying here on Thursday before we saw a sell-off to end the short holiday week. It was also announced today that an export sale of 192,000 million metric tons was made. Two-thirds of that sale is for the 26-27 crop year. U.S. planting pace on the soybeans as of Tuesday was 79% complete. This is 11% ahead of average. The Argentinian harvest pace increased 10% week over week. It is now at 84.6% complete. And on to the wheats. Wheats continue to slide lower after hitting highs mid-month and values not seen since May of 2024. The weakness is attributed to weak U.S. export sales and the fact that U.S. wheat is priced too high and is thus uncompetitive in the world market. Winter wheat progress is at 78% headed versus 70% average and is seen at 26% good to excellent. This is the lowest rating for this week going back to 1986. U.S. spring wheat planting is 86% complete, with 56% of that emerged versus the average of 79 and 51% respectively. July wheat on the winter wheat is trying to hold support at 647, while September spring wheat futures is supported at 685. For pricing opportunities and market information, please reach out to your local grain marketing specialist. We're here to help. That's what we do.